Hey, it's Mark here from dynamitestocks.com, and right now we're looking at GRAM. GRAM I shorted at $4 a share and 1 cent. What I saw in my scans the stock was up 9 trading days in a row positive, and it made higher highs every time, and it was green 9 days in a row. So that in itself isn't that impressive, but the fact that it's up from about 220 a share to about 440 a share, that's about 100% gain in 9 trading days, which is a huge run, and in itself is very overbought. So seeing this, and you can see the volume's consistent, and it's getting exhausted, or it got exhausted. And you can see here it kind of stalled out a little bit up here about 420 something. So I was looking to short it on the first technical breakdown, the first red day. So I wanted to put a limit order in at about 408. So I put an order in at 408 to short that breakdown. And you can see it better here. I'll try to pull up the daily here. And it cracked that support very nicely. And I got filled. Not the best fill, but I got filled at 401. So it's not too bad. Here's the daily chart, or the intraday. And you can see, I'm trying to show it where we can see. There we go. So it kind of, this was the yesterday, and it kind of, hung in there. And then right at the open, there's some massive selling pressure, and it cracked all this support from right, well, the support is right here. That red line right there, that's what the support I was looking at. And it took that out huge and went all the way down to 380 or 385, and then it came back up. But just the fact that it broke that is pretty bearish. It's kind of what I expected it to happen, actually. I mean, I knew it was gonna likely crack that because it can't go up forever. So I would expect it to fade some more tomorrow. I mean, it may actually go up and test the test 430, test that resistance. A lot of times these kind of stocks will go down big and then actually come back up just like it did right here, and then it might go kind of sideways tomorrow or up, even finish positive. And but just the fact that it's so overbought, it's what you could call a supernova, where it just goes straight up and it eventually has to explode downward. So I would expect this one to be around here sometime soon. I mean, who knows? I mean, it could. I mean, it's a good company. It's not a bad company. So I'm gonna take my profit pretty quickly because it's not up on fluff news or anything. So this one's exciting because I got in just at the right time here on the breakdown. So I'm holding that short, and I'm also, the other one I was looking at was CYTR, and this one cracked today too. It's up from about 170 to almost 3. If the stock goes up day after day after day, it eventually has to consolidate. Whether it consolidates and then goes higher, or it consolidates and goes lower. But GRAM, I think that one will go a good bit lower in the near term. What else are we looking at? I've got a position in Jones Soda, put that one up on stockpursuit.com. Jones Soda, it's a good company. It's not a bad company, and they're in major grocery stores, and yet they're a penny stock. And I remember this stock over the years, it's always about $1 or $2 a share. You can see here it did really well in 2013, but what I noticed was it had gotten some good technicals going right here. It bottomed out right here. That was the lowest low, and then it started making higher lows, and it broke out of this pennant right here, and it stalled out right there, but it did a flag right here. I saw the flag, so I bought it on this day, on the spike day, and it just looks like a flat. See how the volume is really low right here? The red bars are the mostly sell volume. It's really low, so that's what you want to see in a bullish flag. So this one's really cool, and I think it's just gonna keep going up, real quick here, and then we'll see what the resistance. The resistance is where it could stall out. Let's see how far it goes. We'll see. This is if it breaks. If it's breaking out of this long-standing trading range. So it could go a lot higher. I mean, 90 cents would be some resistance. And it's got to test this, but when looking at the balance sheet, they're in a pretty good position. There's no long-term debt, and their current ratio, which is the current assets minus current liabilities, is really strong at 1.5. So what's baked in to the stock being so low is poor performance. So anything positive is going to be even more positive because everything was just so bad, and the outlook was so bad on it. Some of these are older ones that I've traded that I don't really need to look at right now, but I've also got a position in MSN. It's Emerson Radio, and this one's kind of a fundamental and a technical play. The fundamentals being that it's right around cash. It's selling for its cash on the balance sheet, which is super cheap. It's actually around net cash, which is the cash minus total liabilities. So it doesn't get much better than that from a value perspective. And this has struggled a long time. And it used to be a $3 stock pretty consistently, but what I was looking at here was the cash level was at about $1 a share. So $1 was where the net cash was. So if you bought it here, you're buying for the cash, which is where you think the lowest it would go. And it has some, see, there was support. A lot of people were buying it around the net cash, around $1. So it would go to $1, then go up, and then went a little around $1 here, and then went back up, and then it went back to $1 again, and went all the way down to went down to like 90 cents. It actually went down to 82 cents here. So I bought it around here, and it's holding in there. So I mean, I didn't put much money in it, so if it goes down to 70, I'll just take a loss. But I mean, you know, if they're not burning a lot of cash, I don't see anything wrong with holding it. So I mean, they could do a if it gets so far down and they still have a lot of cash on their balance sheet, they could do you know, a situation where they would give that cash out, pay that cash out to shareholders. So that's a deep value play. So yeah, I've got that, and I've got Jones Soda, which is looking really good right now. I mean, this is just it's not a perfect test because that was the former resistance, so it kind of flagged off of it around it, and then you know it could just take off from here. You know, we'll see. So those are the ones I wanted to give an update on and you know talk about. So as I make if I'm making any changes to the positions, I'll you know I'll put those up on either Stock Pursuit or more likely Dynamite Stocks. I'll put that up on my dynamitestocks.com. This is Mark signing off from dynamitestocks.com.